picture of it, so I'm gonna just roll with it. We are going to jump right in. So this is meant as kind of an intro to the basics of bookkeeping, how we keep our books, and a little bit on why, because that is important in knowing how to do it, right? So everything in accounting is based on the accounting principle. What is the accounting equation? Sorry, what is the accounting equation and why should you care? I'm going to answer the second part of that first. The accounting equation, or why you should care, is because state and federal law requires every small business to maintain complete and adequate records, right? You have to, you are legally required to. In the case of an audit, keeping good books is going to save your butt. It is going to be so much easier, save you time, frustration, and a lot of money. So you don't have to pay to have somebody come in and figure out your books for you, right? So as a little aside to that, who do you guys think gets audited the most in the US? Which is the number one demographic that gets audited? Small businesses. Single member LLCs and sole proprietors who have a net annual revenue between $25,000 a year and $2 million a year. So essentially us, all of us, we pretty much all fall in that category, are the number one audited businesses in the US. Why is that? Two reasons. One, it's the IRS is the easiest. I mean, come on, let's be real. Right? But number two is because we make mistakes in general. But these are not, I see this all the time, and the mistakes that we make as small business owners are just a lack of knowledge. Every small business owner that I've worked with, actually, there was 99% of the small business owners that I worked with really want to do the right thing. They want to do it the right way, and they're not trying to screw over the government or commit tax fraud or whatever. You just don't know what you don't know, right? So also, you want to keep good books because when you go to file your taxes, we were talking about this before we started, when you want to get a loan, if you need to find investors. If, as a small business owner, you want to buy a car or a house, you better have your books in order so you can prove what your income is. You don't get a W-2. You need to have this info. So all of accounting follows basic rules, requirements, and practices issued by the Financial Accounting Standards Board. And because we are an incredibly creative bunch, we decided to call those the generally accepted accounting principles. Super creative, right? Or GAAP. So there are some GAAP rules that I'm going to kind of go over. This is one that the rest of them I'm going to kind of breeze through. This is one of the biggest mistakes that I see with small business owners. Those of you with nonprofits, this won't apply, but this is called the economic entity assumption. What it is, business is separate and distinct from the owner's personal finances. Yes, this applies if you are a sole proprietorship as well. Okay, so even if you have not registered an LLC, you still need to have separate business finances. I cannot tell you how often this is so common, where people use their personal cards for business, or more often people use their business for their personal stuff. And the correct way to do that is to transfer money from your business account to your personal account. We call that an owner's draw. And then you spend your, you buy your coffee from your personal account, right? Don't just buy it from your business account. Transfer money. I always tell business owners, you have to pay yourself. Okay. There were some of the reasons that this is a big issue. It's a red flag for an audit. Nobody wants to get audited, right? Let's just try to avoid that. Even if your books are nice, let's avoid it. And it also dissolves the corporate veil. This applies if you have an LLC. So does anyone really understand why you would want to get an LLC? Are you familiar with? Okay.
Can you review it?
Yeah, let me go over it. So one of the main reasons for getting an LLC is to provide personal protection, right? Protection for your personal assets. If you get an LLC, what you are doing is you're saying, this is my business. It's an LLC. It's a separate entity, right? It goes back to this economic entity assumption. This is my personal stuff. They're not the same. So that's called the corporate veil, that separation, right? And what happens in that situation, if somebody sues your business, that provides protection for your personal assets. They're suing your business, but your business doesn't own the home that you live in, right? You own the home that you live in, and these are two separate entities. So when they sue the business, they cannot attach that lawsuit to your house. If you mix your business and personal finances, the court's gonna look at that and go, you don't treat those as separate, you treat it as the same thing. So we're gonna treat it as the same thing too, and all of a sudden your house is up for grabs in that lawsuit.
I have a question.
Yeah,
If you have been doing it wrong and then start doing it right, will they look at historical and or like how do you remedy that if you've been?
just start doing it right as soon as possible.
Okay.
Yes, they're gonna look at history, but we also wanna look at what are the odds of you being sued in your particular industry, right? Some industries have a higher risk of lawsuit, some industries really minimal risk of lawsuit, right? So that's a factor. But even like a retail storefront, you know, I have a client in Winthrop, you know, and she just is there for tourists to come and buy stuff from. Somebody could slip and fall on her steps in the middle of winter and sue her, right? So there's not a huge risk of lawsuit, but there's still is risk. And so just do it as soon as possible, and the longer you do that for, the better situation you're gonna be in.
Okay.
And then here's another one. It opens you up to questions if you get audited, which, right? But if it does, it opens you up to questions as to whether that expense that you're claiming on your business is actually a business expense, or if it's a personal expense, right? And it might be a legitimate business expense. Maybe you bought light bulbs at the grocery store for your storefront, but they're gonna be like, but you don't treat it as separate. So how do we really know that you use those light bulbs in the store? If you keep those separate, then every time you buy light bulbs, they know it's for the store. Or if you buy a meal while you're traveling, or you buy a meal in my situation with a client, that's very legitimately a business expense because I'm not buying all sorts of things in my new car, right? Okay. Here's a bunch more rules. I'm not going to go over these in detail. These are all pretty common sense. You have them in your notes. So it's a monetary unit. We're using dollars, not monopoly money, not Canadian money, not the European, but you know, what is the European dollar? Anyway, euro, thank you. So, time period assumption, it's a specific period of time, which is shown on all financial reports and statements. Any bookkeeping software used is going to automatically do that. Cost principal transactions are shown at the original and historical cost. If you buy a piece of property and then you find oil on that property tomorrow and the value of that, you know, is 100 times what it was, you're still valuing that in your books is what you bought it as. It's forever the price of it. Full disclosure, all pertinent information needs to be in the books, right? This is all going concern. The business is not going out of business tomorrow. You're going to keep going, right? It's all basic stuff. Matching focus, it forces us to use what's called the accrual basis. So I put more on this later, and then I was laying in bed 2 nights ago after I'd emailed the presentation over and realized that I never came back to that because, you know, of course I was. And then revenue recognition, revenue, sales, and income is shown in the financial statements when the service is performed or the good sold. That also deals with the accrual basis. So I'm just going to talk a little bit right now about what accrual basis is. Does anyone know, first of all, or do we not know?
Kind of. There are 2 different accrual, and then there's another
Cash basis.
Okay.
Yeah. So cash basis and accrual basis. Cash basis is what most people use because it's easy, right? When the cash moves, that's when you record the transaction, right? Cash comes out of your bank on the first Monday in October, you're going to record the transaction in October, right? Accrual basis, you record the transaction when it was due or earned, right? So that money that came out of your bank on the first Monday in October was for a bill that you received in September. You're going to enter that bill into your books with a September date, and that's when you're going to recognize that expense in your books is in September, not in October, right? Cash basis, you'll recognize it in October. This becomes really important depending on your industry, right? If you're a retail store, customer walks into your store, buys something, the sale is reported right there on the same day. There's no shift in date. You're a construction company, somebody gives you $100,000 for a project you're going to do next year. This is really important, okay? And the reason that we use accrual basis is because it's much harder for people to screw over the government, right? Essentially, it becomes harder to commit fraud when you're using an accrual basis, which gets really complicated. And we're not going to, but this is why we should use the accrual basis, right? And also, like, if you are a bigger business and you have somebody doing your books, cash basis, they could be embezzling money from you. It's pretty harder to find. If you're using accrual basis, it's a lot easier to see that stuff. Okay. If there's more questions on that later, I can definitely talk about it. But like I said, this becomes important in like event planning, I have an event planner company, construction companies. Anytime that you're taking a deposit in advance for a service that's performed later. And in bills, it's just a matter of making sure the bill gets put into the books and then the date of the bill, the date is received, or the date of service is received, okay? Materiality principle is insignificant. This means I'm not gonna chase down that 2 cents on your books, which I hate. I wanna chase down that $2 and make sure that everything matches perfectly. So like, honestly, this is kind of a hard one for bookkeepers and accountants because we want everything to match perfectly. But if it's insignificant, and that number varies based on the industry, right? If you have a giant business, you're doing $10 million a year, that $20 is totally insignificant. If you're doing $20,000 a year, you might want to look for that $20, right? So it's just kind of a matter of that. Conservatism principle, that just means we're going to be as conservative as possible in books. We're going to decrease if there's a choice, and often this is not the case, but if there's a choice, we're going to decrease the net income or decrease the assets equity or increase the liabilities, whatever's the most conservative way of showing that. Okay.
Question
Yeah.
on the cost principle. So on the balance sheet, you've got building, the land, those things. So the number is when you first bought it 30 years ago.
Yep.
You don't, it doesn't change like as your tax assessment changes.
Nope. Yeah, it doesn't
make any
change.
sense to me because it's
It is
worth
weird.
a lot more than what you paid for it 30 years ago.
But the thing is when you sell it, okay, here's a good example. So say you buy a house 30 years ago and you spent $50,000 on that house. That house has increased in value to today, right? You sell that house today for $350,000. No, you didn't make $300,000 on a house, but they're still going to tax you on that $300,000 as if you made $300,000. That's the gain on the sale of the asset. And I completely understand that this sounds wonky, but that is how it works. It's a little bit different when an asset decreases in value because we do include depreciation on the books, not on the asset account though. We include depreciation in a different spot. There is a way to include appreciation, but that's not as common. I know, but that's how it works. All right, so so that's why we're gonna pay attention to the accounting principle and how the accounting rules kind of go. Now we're gonna talk about what is the accounting equation. I'm gonna try and move forward. So the accounting equation is essentially it's your assets equals your liabilities plus your equity. The easiest way for me to explain this to people is in home ownership. It's not a perfect analogy, but it's good enough for now. So what it is, there's your house, that's your asset, right? The value of that house is the value of your asset. Your liability is what you owe the bank. That is the portion of that house that the bank owns, right? And then the equity in your house is obviously you own the left side of that house. You haven't bought the garage yet. The bank still owns the garage, but you own the left side, right? The bank owns the right. So this is essentially the same in a business. In a business, your assets equal your liabilities plus your equity. Again, it's not a perfect analogy, and you'll see that as we move forward, but it's good enough for today. So when you put things in your books, when you put transactions in your books, it always has to balance. This is called double entry accounting. Okay. Double entry accounting is essentially it's fancy talk for you have to know where the money came from and where the money went. It always has to balance, okay? And this is the balance sheet. This is what constitutes that financial statement. So if you buy a piece of equipment for your business, you are increasing the value of your assets by $10,000. Say you got a loan for that piece of equipment, you're also increasing your liabilities by $10,000. Liabilities is what you owe, okay? So say that same piece of equipment, you bought that for $10,000, but you paid half in cash, and then the other half you got a loan for it, okay? So you're increasing your asset, your equipment asset by $10,000, you're decreasing your cash asset by $5,000. And, oh, you're increasing that, okay. I was on a Zoom call the other day and I activated somebody's Alexa, so you're increasing your liabilities by $5,000, but if you look at that, it is still in balance, right? The $10,000 minus the $5,000 is assets. It's a total increase of $5,000 in assets and an increase of $5,000 in liabilities. Another example, you take a personal draw from the business because you do this every month so that you can keep your personal and business finances separate. And you're paying yourself. Everybody wants to pay themselves. That's the point. So you're going to decrease the cash in your business by $2,000 and you're going to decrease your equity by $2,000. Okay, it's still in balance. Last one is you pay cash for inventory. You have to buy stuff so you can sell stuff. You decrease your cash by $500. You increase your inventory value by $500. Okay, every single one of these, it stays in balance. And every single one of these, we have a very, very specific history of where did that money come from and where did that money go, okay? We always want to make sure we have that. I'm going to take a little aside here and talk about something that a lot of accounting software likes to do, QuickBooks in particular. Say you start a fresh QuickBooks file on January 1st, you haven't kept it in software before, but you're going to start doing this the proper way going forward. You open up that file, you have a bank account as of December 31st. QuickBooks looks at that, it throws that bank account balance into opening balance equity. What is opening balance equity? No, we don't know anything about that. QuickBooks will do this automatically. If you do this, if you set up books, any good bookkeeper accountant is going to go in and change that. It's going to be a retained earnings. Retained earnings is the amount of money that you had last year that you already reported on your taxes. It's already been paid taxes on. It is not relevant for this year. That's what your retained earnings is. Your earnings this year is what this year's taxes is going to be paid on, right? But your retained earnings came from previous years. So if you change that opening balance equity, which is absolute garbage. Now, you could also put that as an owner's contribution. There might be a situation where the opening balance equity is an owner's contribution. Say you started a brand new business. And as seed money for your business, you opened a bank account for the business with $5,000. Where did that money come from? It's not opening balance equity, it's owner's contribution. Okay, so just that's like a personal pet peeve. And literally, when I get into a client's books, I take that opening balance equity account and I type do not use in the thing. So, all right. Let me make sure I caught all of that. Okay, so double entry bookkeeping ensures every financial transaction is accurately recorded and provides a complete audit trail of the financial activities, where to come from, where to go. It's essential for making informed decisions and preparing accurate financial statements, right? Everything that we do is coming down to financial statements. It also allows you to track your finances over time and provide some valuable insights into your business. And we're going to go into that next month in the Bookkeeping 201, the reports. So how do we do this? Software options. These options are good for either a profit or nonprofit industry, either one. QuickBooks Online is what I use for my clients in my business. It's what I use for my books. It is not perfect. There are issues. We all know this, right? But it's a good option. Just please, for the love of God, don't use the mobile app. The mobile app for QuickBooks Online is garbage. There is one purpose for it. We will talk about that later for the mobile app. Xero. I don't know if anyone has heard of Xero. Has anyone heard of Xero? Bookkeeping software? You have. Okay. I'm very excited about Xero as a bookkeeper. This is a company that started in Australia. They've been in the US for over a decade now. They are a viable alternative to QuickBooks Online. I know bookkeepers, colleagues of mine who exclusively work in Xero. If clients want to work with them, they move their books over to Xero, and that's what they do. I would love to get training in. I just don't have the capacity to do that right now. I just hired my first employee. She started training yesterday. So like maybe soon I'll get to the point where I can work in Xero and have that as another option. It's a great option. Okay. There's also FreshBooks, NetSuite, Zoho, Wave, Sage, others I'm sure that I have not listed here. Any of them are fine, honestly. You just have to learn the software. That's why we went over the accounting basics first, the equation first, because that's that all funnels into this. And it does it in different ways based on how the software operates, and that's fine. But
can I ask what you like about Xero over QuickBooks?
Their customer service.
Okay.
First and foremost, their customer service is amazing. There are some drawbacks to Xero as well. One of the primary ones for me as a bookkeeper is I can't undo reconciliations in Xero, which drives me nuts. I can't do that in QuickBooks. I don't know as much about Xero as I would like, but one thing I will tell you right up the gate is that they have way better customer service, and their prices are a little bit lower. Not like ridiculously, not so much lower that I'm gonna go, like get certified at zero tomorrow.
Right.
But they are a little bit lower, and they're a really, really good full software. Some of these other ones, FreshBooks, NetSuite, Zoho, they're kind of like, they will work, but they're not as robust of a bookkeeping software as Xero and QuickBooks are.
I've looked at Zoho, I use QuickBooks, and I've been trying to find an alternative that was less expensive. I don't know.
Yeah.
But my consultant that I'm working with was like, most you're gonna save more money by staying in QuickBooks when your bookkeeper knows exactly what to do in QuickBooks and they don't understand Zoho or Xero.
So I have colleagues that work exclusively at Xero, and then I do know someone who works exclusively at FreshBooks. I don't know about Zoho, that's not one that I'm familiar with as much, but if you want to talk to somebody who works in Xero or in FreshBooks, let me know and I can give you a name or contact information and you can reach out to them and see. I personally don't right now, but I can definitely give you a price.
Okay.
Yeah.
I mean, I'm fully in QuickBooks for years, so,
Yeah,
and I really want to start.
that's not a bad idea. And right now is a really good time. If anyone wants to start FreshBooks, and the thing about QuickBooks is if you cancel the subscription, all of your data stays active and accessible for a full year. Okay. However, when we talk about record keeping, a full year is not enough. We'll get to that.
Yeah.
Okay, let's keep moving.
Okay.
So one thing I say to people when they are choosing a software is you need to be mindful of what other software you might use in your industry. If you are a retail store, a restaurant, you have a POS system, that POS system needs to connect. Now, it doesn't have to connect, but it's going to make your life so much easier if it does connect, okay? So we really, really want to make sure that the software that we're using connects well. Sometimes, even if it connects, it's not a good connection. It's not a good, right?
QuickBooks and PayPal.
Yeah, no, we use PayPal clearing accounts. If we have to use PayPal, we use a clearing account for that. And that's a way around it because then everything that comes from PayPal goes to the clearing account and then we can do whatever transactions we need and then move it to the bank account. But that's a way to do it. Also, Shopify is another one that if you have online sales and you're using Shopify does something nicely with QuickBooks. It's doable with a clearing account. A clearing account would be the next step. Like if it doesn't have really good integration, use a clearing account and then you can do what adjustments need to happen in the clearing account, which is probably going to include journal entries, which gets a little more complicated in this. So I'll just warn you in advance. But these are things that you want to consider when you're choosing a software, right? Not everything does sync with QuickBooks. Sometimes though, there's a third-party app that can do the same for you, right? Stripe, very common payment processor. Stripe is a great payment processor. I like it a lot. It has good reporting, it has good functionality. It does not play nicely with QuickBooks, but there's this really cool third-party app called Accoday that connects from Stripe to QuickBooks. It does that integration for you. It's like $10 a month. It's great. So ACODEI, Accoday. I think I could be butchering the pronunciation, but I'm just going to roll with it to some friends. Okay. This is just one example. There are a lot of others out there. I mean, the Shopify client that I have, we just do a clearing account, but I do know A2X is a software that can connect Shopify to QuickBooks and it can take care of all that dinky. If you are really, when you get really large, when we start to talk about scale, there are better options. When we start to talk about scale, then the finances are there to pay for these items because A2X is not a cheap option. It's not something I would recommend for a very small business, right? There's also Bookkeep is another software that does they do a lot of different integrations, so it might be worth looking at Bookkeep. So take some time to research and to see what might be helpful. I'm going to talk about QuickBooks Online because we already discussed that that's what I use in my business. Okay. So we've chosen our software. We know how it's going to sync. Now we're going to set it up. Chart of accounts. These are your most basic categories. And I think that some of the challenge is just learning the lingo of bookkeeping and accounting, right? We use words in ways that they're not normally used. We make up our, and honestly, there's not even consistency within the industry of the way that we use words. Income and revenue aren't necessarily the same thing, but they get used interchangeably even in the industry. So this is where it can get a little bit confusing, but the chart of accounts essentially is just a list of all the categories, right? So there's your income categories, your bank and credit card accounts, your assets are their own individual categories, expense categories. And one of the most common problems I see in this is an overcomplicated chart of accounts. You want to try, it's one of those things where it's actually harder to create a simple version of it, right? Like it takes a lot of engineering to bring it down to its most basic simple version. I have a client that came to me and they had an account called MailChimp. Like that's literally a vendor, that's the only expense. What you want to think about is what is the purpose of this expense, right? MailChimp is essentially an advertising tool because you are doing newsletters, you advertise yourself, so that's an advertising expense. That can go in advertising with other types of advertising, okay? There's two kind of pieces to creating a chart of accounts that you want to think about. One, the most basic, you're doing this for taxes. You want to make sure that when you file your taxes, you're like, this is what I spent on advertising. This is what I spent on maintenance. It's really simple, right? It's really easy. But you might need more information. The taxes are not very detailed. And you might want some additional information just for internal purposes of like, how much did I spend on email marketing advertising versus print? And then also, if you know how much you're spending on those, you can track what kind of a return you're getting on that. And was my money really meaningful being spent in that way, right? So there's information that you might need as a business owner that is going to be a little more detailed. That's where you can add some accounts. So we're going to have what I call parent accounts. And then you can create sub-accounts underneath those, right? So if you have an advertising category, then you can have promotional materials, email marketing, social media advertising, whatever different kind of radio, whatever categories you want, that's going to be meaningful for you. The only thing I would say here is don't create a category unless you're going to use it. Okay? You can always split it out later if necessary. There's some easy ways to do that. But oh, it's not as easy for business owners. They don't think that's what we'll do. Okay, I'm really sorry. It's really easy for me to recategorize those, but I don't think they make that account total available to just business owners. Okay, so yeah,
On that to recategorize, like if it's something that isn't being used or being used.
if you are using a broad advertising category and you decide that you want more information than that, you can create subcategories and then recategorize those advertising into the subcategories, right? And so that's not going to change it on your tax form because it's still under this big heading of advertising. It's just under a smaller heading that details it where you want to see it, right? Okay. So it's still the same for taxes.
So if we were dumping it all into advertising and then we wanted to break it out, it's harder for us to do it.
Yeah, it is harder.
But for y'all to do it,
it's really easy. They give us tools and QuickBooks Online. They give us tools sometimes that's honestly when I'm doing a cleanup of a client's books. That's where that is doing cleanups.
Tags, do you use tags?
I don't. Okay. No. There's nothing wrong with tags. You can use them. I just don't. If I have clients who need that, I use classes. So tags they're all right.
Yeah, I don't have time learning reports, so because I don't understand what I'm doing.
I love reports. Reports are the best.
I can't wait till next.
So I just kind of did this because the last time I did this presentation, this was apparently more confusing than I thought it was. Assets are things like your bank accounts, your equipment, your vehicles, your buildings, your land, any inventory. Accounts receivable that's an asset. Somebody owes you money, that's an asset. Okay. Liabilities, your credit cards, your loans, mortgages, sales tax that is owed, and accounts that you owe, money that you owe somebody else's liability. Equity, this is where I said that homeownership analogy breaks down. Equity is income, expenses, and owner draws and contributions. There is more to it than that, but essentially that's all you need to know because that's the simplest version, right? Okay.
Can I ask a question? Why would owner's draw be considered equity?
It's money that you're putting into or taking out of the business. So, for example,
Okay,
let's,
I
does
got
that make
you.
sense
Yeah,
now?
no,
Okay.
it makes. Putting it and taking it out.
yeah. And
It's catching up.
And because income, so if you're doing payroll for if you are an LLC being taxed as an S corp and you are on payroll as an owner and also taking draws, then that payroll is going to be an expense that's under equity. Like I said, this is where kind of it becomes a little harder to explain why these things fall under equity. It's just, it is what it is.
Cause I would have thought that would be a liability, but I guess that's money owed.
Yeah. Liability is, I mean, really, liability is money that you owe, essentially. And if you take money out of the business, you don't owe yourself.
Yeah.
And you don't have to take money out of the business, right? You can leave it in there. So it's not like you have to pay yourself. If you had to pay yourself, then it might move into liability, but you don't. I think a lot of business owners don't. Yeah.
So I'm trying to wrap my head around how an expense is equity. Because it feels
Yeah.
like liability just intuitively, you know what I
Because the
mean?
money's gone. An expense is, it adjusts your equity because an expense is, the money's out, the money's gone. You don't know it anymore, it's already paid.
Okay,
That's because when income and expenses fall into the equity category, that's like money has actually changed hands in that situation.
okay,
Okay, if you owe somebody money, it's a bill that you haven't paid yet, yes, it's liability. And then you pay that bill, it moves
okay,
into the equity.
okay, got it.
Like I said, it gets a little.
It's like money that you earned that you used.
Mhm.
And it's gone.
Yeah, it's gone.
Okay,
You used it.
I get that.
And then it's the same thing, so the accounts receivable side where the income part of the equity.
Mhm.
So say that you sold service or whatever, and then you billed them for it, a locksmith comes to your house, they're gonna do that, and then they're gonna, I don't know why they would bill you for that later. Anyways, point being, they leave you with an invoice.
Okay.
And that invoice is owed to them. You haven't given them money yet, money's still in your bank account, but you owe them now. That's a liability. As the locksmith owner, as the owner of the locksmith business, you go, you open somebody's car for them, their kid locked their keys in the car with their first and the engine running in the car. Not that that's happened to me. You give them an invoice and you walk away. That person owes you money, right? That's money that you have not yet collected. So it's an asset because it's owed to you. They have to pay you. You could legally go after them if they don't pay you.
Mhm.
Once they actually pay you, that moves from accounts receivable to income, from assets to equity. Okay. I hope that helps.
Yeah.
Okay, good. All right. How far did I go? Okay. All right, so now that you have your bookkeeping software set up, we're gonna start actually doing the books, right? Record every single financial transaction. One thing I love about QuickBooks, and Xero is also, I think most bookkeeping software these days does this, you can connect your banks and your credit cards directly to your software. So it pulls all that data in. And then it has what's called a bank feed. And so that's where you go to, I think QuickBooks, because they can't leave anything alone. It used to be called banking, now they're calling it transactions, right? So you go to the transactions section of your bookkeeping software, and there will be a list of your bank accounts that you've connected, and your credit cards will show up there as well, and then a list of transactions underneath that. And you have the ability to go into those transactions and to categorize them. What is it, right? The bank knows that how to use your debit card, you use your credit card, whatever it is, somebody deposit, you've got to deposit into your account. You can categorize directly from the bank feed, and this makes life a lot easier and a lot faster, right? So you do want to include as much detail as possible, though. Make sure you put the vendor in. If you don't put a vendor in an expense, it's really hard to go back and find the history for that. But if you put a vendor, there's a different section in QuickBooks where you can go to that specific vendor and see every single payment you sent them. I saved a client $1,000 because she duplicated the payment to her landlord. And I saw that because I was like, that looks a little off. I feel like we've done that recently, but I don't remember, right? I don't know. I'm not in her head. So I went to the vendor file. I counted that. We've paid this many times. And I sent the client a heads up. Hey, that's an extra $1,000 that you don't have to pay. She's a tiny business. That's a huge amount of money. No, that's a lot of money for me. Okay. So that's why you want to make sure that you're entering the vendors, and this is where you categorize, right? So that example previously of the client I had who had a MailChimp account set up, MailChimp is the vendor, that's who you paid. Vendor, I think QuickBooks calls it payees, which is why I put that in there, right? So you have that. But then you're gonna put the category. MailChimp is gonna be an advertising expense, right? Or this expense is going to be for inventory. Inventory gets, does anyone have inventory? You don't. Do you have inventory? No? Okay. Sometimes that's a whole another layer of complexity that we're not going to go over in detail today. One thing I will say, QuickBooks sucks at tracking inventory. If you have a little bit of inventory, like the food co is going to have a lot. That's a whole inventory thing, right? But does the POS track it? Okay, we just got it. What is your POS system you're using? What did you get? Right? Interesting. Let me know how that goes. I'm curious. I'm always looking at POS systems. I'm always like excited to learn more. I have one of my clients a Shopkeep.
Like, how do you feel about the Square POS?
They're pretty good.
That's
Square-
what,
yeah.
I've worked in them a couple times for clients too, and I'm like,
Mhm.
this is awesome.
Yeah. Square POS is pretty good.
I know all the things.
And Square plays nicely with it.
Yeah,
So, just so you know, those two play in the sandbox nicely together. They're friends in the school yard. Here's another thing. For example, one of my retail stores, they buy goods from the same places over and over and over again, right? A lot of times as a business, you're buying from the same places, you're, like you have the same vendors. You can set up rules in QuickBooks to make this easier for you, right? You can say, if a bank transaction comes through, that's payable to Home Depot, this is always gonna be cost of goods sold, supplies and materials. Always, right? So you can set up this rule, and that's great. I love that. I set up rules all the time. Don't ever have QuickBooks Auto. Do not have them. You always want to get eyes on it. So what setting up that rule does for you is it will automatically fill out the vendor and the category so that you can just match it. But you don't want QuickBooks to auto add it, because a lot of times QuickBooks will try to be helpful and then really mess up your books, because it will see something and it'll flag something incorrectly. Sometimes they're the most wild things. I wish I could remember the story I heard from one of my colleagues recently, and I was just like, it did what now? So just always get eyes on it. QuickBooks is like, it has its drawbacks, that's what. Okay, and then again, another separate your business personal finances. If for some reason shit happens, right? I used the wrong card and I, bought my coffee on the way to this workshop on my business card instead of my personal card. Actually, it's a business expense, but whatever, right? I bought my morning coffee on the business card and I shouldn't. You can code that from the bank feed to an owner's distribution, right? That's money that you're giving yourself for personal use. It's not the end of the world. Just maybe put masking tape on your credit card. I'm not even kidding. I've done this, right? I can't tell you how many times it's genius. You put masking tape on it and you write business on your credit card. And
I did that.
Yeah.
I did that because, they both are just from the same bag, they look exactly the same, and I can never remember which one was, so I did that.
Right.
Business.
Exactly.
And it does save me so much headaches.
Yeah, it's perfect, right? Love that. I do that. I'm getting a bunch of cards now. So I have the joint account debit card, the personal debit, the business debit, personal credit, the business. It's too much. Masking tape, you just write it on there. Yeah. So as far as income goes, a lot of people will just deposit money into the bank account and then they'll categorize it from there. That's okay. It's okay, but it's not great. We want a little more detail, right? So if you're using a POS system, the POS is going to categorize that for you. And then hopefully it plays nice in the sandbox with QuickBooks and everything's great, right? If you're not using a POS system, use invoices and sales receipts in QuickBooks. The difference between an invoice and a sales receipt, they already gave you the money. You have the money. Money's done. Sales receipt, And the sales receipt is gonna categorize that where that needs to go, and then when the deposit comes through the bank feed, QuickBooks is gonna go, oh, you have a sales receipt for the same amount, is this the match? And you're gonna, yes, that's the match, right? If it's an invoice, say I'm a construction company and I invoiced a client for a remodel, and then I send them the invoice, 30 days later, they pay me the money. Again, QuickBooks is gonna see that. The problem can be sometimes invoices are the same amount, or sales receipts are the same amounts, right? A lot of times that happens, you just wanna make sure that you're keeping an eye on it. But I highly recommend that you use, in my business, I have recurring monthly payments. My clients are just set up on a flat rate monthly, it goes through automatically, nobody has to think about it, it's easy breezy. I have recurring sales receipts that happen in my QuickBooks, it happens automatically behind the scenes, right? And that way, it's all, it's a history, right? You're creating a very detailed history just in case.
Do you recommend, like scanning and uploading receipts and storing them in QuickBooks or
You can.
print?
You
I
can
see
do
that
that.
it's an option.
It is an
but
option.
I'm just wondering.
We are gonna go over record keeping a little later,
Okay.
and it falls under record keeping, but yes, that is an option. And remember what I said, QuickBooks mobile app sucked except for one thing, that's the one thing.
Okay,
QuickBooks mobile app, if you decide to store all of your receipts in QuickBooks, which you absolutely can do, the mobile app is really great for taking a picture and uploading it.
okay.
All right, next, so we've recorded all of our financial transactions, all of our expenses, all of our income. Reconcile your accounts, please. You guys know what that is? It's when you get your bank statement and you compare your bank statement to QuickBooks and you make sure that everything matches, right? Please do this. I have a client that I did this for recently, and there was a paycheck from 2022 that had not yet cleared. This is a problem because a paycheck is legally owed to that person. So they have to, if they can't get, they should probably reissue it at this point, honestly, but now we're in a new year, and then that becomes complicated because you reported that income on their W-2 in 2022. Okay, this is where these things get caught. And how do you know that that check never cleared your bank unless you reconcile it? So just reconcile your accounts, even though you categorized everything, it's great, double check. Sometimes there's duplications. I've seen Amazon duplicate. Sometimes this will happen, not just with Amazon. QuickBooks sometimes has issues with pre-authorizations, right? So you know how you get that pre-auth on your card, and then the transaction comes through later, and QuickBooks is like, you did it twice. And you're like, no, I didn't do it twice. We just stopped. Okay, this will catch that. Okay. Run your financial reports every month. This is for you internally. And this is also it's another double check, like reconciling, this is another double check. It's just another way that you can glance over your reports, see what's going on. We're not gonna go in detail in this. The last time I did this presentation, I tried to do it all in one, and it was not enough time. It was not enough time. We need a full 2 hours to do the financial reports, that's huge. There are 3 reports that every business should be running every single month. And depending on the industry and the type of business, different reports are going to be more meaningful to you, okay? Everyone's familiar with the profit and loss. In the bookkeeping and accounting world, we get kind of irritated with that because you cannot have both a profit and a loss. You have one or the other. It's not both, right? So we call it the income statement, but nobody knows what I mean when I say that. So I go back to profit and loss, right? So
It should be profit or loss.
profit
not
or
and.
loss, yes, right, see, if they just put a slash in there, well, yeah, profit slash loss.
But then you couldn't say P&L.
That's true, P&L is kind of in short. So that is.
POL. That's too close to POS.
POS sometimes is the most accurate abbreviation.
Yes, I agree.
Sometimes, anyway. So the income statement, the profit and loss, this is essentially a statement of your equity, the equity side of the accounting equation, right? This is your income, this is your expenses. And then what's the difference? That's there. The balance sheet is the entire accounting equation. All of your assets, all of your liabilities, all of your equity, both sides should be equal. And then the statement of cash flows. Because neither the income statement nor the balance sheet is very good at telling you how much money you have in the bank at the beginning and at the end. Cash flow can be a massive problem for businesses, and projecting cash flow, seeing what comes up. This is a lot of what I do in the advising work that I do with businesses, and I teach them how to see into the future. Like, there are certain expenses that you know are going to happen. We live in a heavily seasonal area. There are certain fluctuations to your income that we can somewhat predict, obviously not entirely. We know that in August of every year, businesses might have this down. Whether or not we have fires or it's smoky, people have just learned we're just not going to go in August. We're just not going to plan for it. It's probably going to be canceled, right? We can look at that and start projecting when we start looking at these trends. Okay, more details in next month.
So there will be one more.
There's one more workshop, yes.
Okay.
I will have the date and the time. It's actually the same time, and I will let you Friday morning, October 27th. It's all at the end of, it's on the last slides, right? Same place as well. All right, we're gonna keep going. Now that everyone is back, welcome back. I left the video going. It's fine. Okay, so we're gonna move on to payroll, because payroll is an entire thing unto itself, okay? So this is not gonna apply to everybody, but it will apply to some of you. I'm gonna say this part first. If you have the need to hire staff, you have the need to outsource your payroll. If you have one, I hired my first staff member yesterday. I outsourced my payroll. I'm not doing my own payroll. Not doing it. Okay, first of all, I hate doing payroll. I'm incapable of it. I do not like it. Why? I don't know, honestly. Why don't I like it? I'm not really sure. I think even with the bookkeeping and accounting industry, we all have our own little kind of focus and thing that we love to do, right? And sales tax is I am the queen of sales tax. Like, I have a lot of colleagues who will refer to me for sales tax questions specifically. I'm an expert when it comes to sales. I'm an expert in Washington State, and I know a lot about Washington State. So I won't say I'm an expert in all there is to know about sales tax, because that is a massive, massive topic. But payroll, for some reason, just doesn't, I don't know, I'm get excited. It's boring. You like it? I do it on the spreadsheet. Yeah. See, some people love it. And honestly, like, I'm capable of it, but I just enjoy doing it. I've done it on the spreadsheet. I like it. I love that. That's awesome. It's fantastic. Oh, I'm weird too. Mine are just different weirdness. We all have our own little quirks, right? So payroll, if you do it on a spreadsheet and you love doing it and you're on top of it and you're making sure that everything is getting taken care of in your filings and you're staying up to date on the newest stuff, cool, by all means do it. Most people in the world are not, right? And so for most people in the world, please outsource this. This is one of the fastest ways that I've seen businesses get in trouble is with payroll. And payroll company, the payroll government agencies, they do not care. You didn't do it right, it's fine. You're penalized. It adds up so fast. You will save yourself a lot of time, a lot of headache, and probably a lot of money to outsource this. I use Gusto. I think Gusto's a great option. It's not perfect. None of them are, right? Other really good options, OnPay is a great option. Patriot Software is a good option. There's also options like Paychecks, ADP, Sure Payroll, Paylocity, Paycor. There's tons of them out there. There's also private individual payroll companies, right? These are the companies that do for payroll what I do for bookkeeping, what you do for taxes, right? We specialize. This is all we do. I'm not a giant corporation. I'm not trying to serve everybody. I have my clients that I really do a good job for. And I have one that I refer people to. Construction is a really unique situation. Okay, the reason it's unique is because of labor and industries in the state of Washington. When you have workers' comp, if you have a retail store, or like to the co-op, you have the same L&I rate for everybody who works in that store, pretty much. Probably. There might be some people, that have different rates. But most, you have people, they have one rate. This is the L&I rate. For my job, I hire office staff. They have a single rate. There's no variation. Construction, oh boy, you got all sorts of things. And it's really important to get those people on the correct rate, because some of those rates are. When we're talking about roofing, the L&I rate for roofing is way higher than it is for interior finishing. Okay, and so if you've got a construction guy who's doing interior finishing and you're paying roofing rates on his L&I, that's insane. Like, you know, that costs you a lot of money. And you can have a single employee who's doing both of those jobs within a single pay period. And so you need to make sure that they get paid hours on 2 different L&I rates. Okay, this is a situation that everyone is gonna suck at except for that private payroll company. Gusto has the ability to do separate rates, it's not great at it. So I recommend, I send people to Valor Payroll Solutions. They're based out of Oklahoma, but they are amazing. I absolutely love them and they do a really good job of this, okay?
Valor Payroll
Yep.
Solutions.
Valor, VALOR. Email me if you want contact info and I'll make an introduction. Do not use QuickBooks Online Payroll. Please, for the love of God, do you guys use that one? Okay. Yeah. QuickBooks Online Payroll, first of all, it's more expensive. The rest of them are gonna be cheaper, okay? Secondly, I cannot tell you how many times I've seen QuickBooks Online Payroll screw stuff up. Okay, QuickBooks has not filed your quarterly government filings, but they don't give you any notification. They don't tell you that filing didn't go through, why would you want to know that information? That's just something, right? And you find out when the government comes after you. It's not a fun situation to be in. And QuickBooks is not known for their valuable customer service. They're all right for some of the basic stuff, but when you have complicated payroll questions, trying to get customer service to help you with that is an absolute nightmare. So I highly recommend that people don't use QuickBooks Online Payroll just because it messes it up too much. One of the benefits of using an outsourced payroll option is that they're going to track all of that for you, right? And then they do your filing. Washington is one of the most complicated states in the US. I'm not sure if you guys are aware of that. But Washington, Pennsylvania, and somewhere else, I forget which. These are the most difficult states to do payroll in. Why? Because we have ESD, we have state L&I. Most states, it's not run through the state, it's individual L&I that you have to get. We have PFML, paid family and medical leave. Oh, good. Okay. If you have less than 50 employees, you are not required to pay into that. So most of you probably don't, right? But the employee has to pay. And you have to file that, right? And now we have a new one. Anyone know what the new one is that just started? The CARES Act, long-term disability. Okay. See, you know, because you do payroll. I love this. She's on top of it. That's awesome. Okay.
I get more and more frustrated with the state and how, you can't just put in something and have it do it all. You know, you have to get each thing.
We still want to be on site.
And blah, blah,
Yeah.
blah.
I did payroll manually when PFL came into play, and I was so frustrated because PFL is administered by the ESD, but it's a totally separate website, a totally separate filing. You can't just bulk that into the existing filing there. No, it's a whole separate thing. And now CARES Act is a new filing as well. Another, yeah, and of course it is. So honestly, save yourself
Really, it's only $20.
Yeah,
Very inexpensive.
as like I said, there is no reason with these prices, there's no reason not to do it. QuickBooks is a more expensive option than a lot of these. You also, one thing that I love about Gusto in particular, not all of these softwares will do this, so check. When you run payroll in Gusto, okay, so normally you run payroll and you pay your employees, and then you hold on to all the taxes until the end of the quarter. And at the end of the quarter, you have to send a big check for all the taxes, right? If you use Gusto, they're going to take that money every single pay period. And then they already have the money at the end of the quarter when they do a filing. And there might be a little adjustment, $1 here, $1 there. Actually, I've never even seen it be as high as $1. It's usually pennies here and pennies there, right? But there are adjustments, but there's rounding issues at the end of the year. That's fine, or at the end of the quarter. That's fine. I love that they do that, particularly for my smaller businesses, because that makes cash flow so much easier. It's really hard and this is why I help with people with the cash flow projection and the paying attention to your liabilities. Your sales tax is another one that can really add up, you know, like if you have these kinds of liabilities, there's money sitting in your bank. But we all know when there's money in the bank, we're like, oh, I'm good, I can spend it. That sort of just takes that whole thing out of the equation, right? It's really nice. It's really, really nice to, and some of the others as well. I work with Gusto, that's why I'm gonna talk about them most, but I will say it is not the only option. It might not even be the best option. Okay. So when you use these services, make sure that they're gonna do this for you, okay? QuickBooks is one that they can do it for you. They don't always do it for you. Sometimes they say they're gonna do it for you and then they don't do it. File your quarterly reports with the ESD, LNI, the FML, and the 941 with the IRS. Those are your quarterly. The 941 might actually need more frequent deposits depending on how much you pay your staff members. You might have to make an EFTPS deposit. That's the 941. That's your Medicare, Social Security, and federal withholding. You might have to do that every pay cycle. Depends. Depends on how much money you pay on the payroll. Okay. You pay one of these companies 40-ish bucks a month. It might be a little more, like 45. In that ballpark, right? $5 a month per employee, maybe $6. I think Gusto raised their rates recently. I think it's $6 per employee now. It's still worth it. You pay them, they do all those filings for you, and you can check the status on your account online, right? They're also going to send out at the end of the year. They're going to do your 940, which is your federal unemployment, and they're going to send W-2s to all your employees. You don't have to do any of that.
Gusto does that?
Mm-hmm. OnPay also does that. I actually have a poor OnPay. This sweet rep has been trying to connect with me. I went to a conference in Dallas, bookkeeping conference in Dallas in June, and I'm curious. I want to check into OnPay. I've looked at Patriot before. It's all right. It's not my favorite. It wasn't good enough for me to move away from Gusto, which I'm familiar with. It takes a lot for me to move because I have clients established in the software, right? I am familiar with it. There's a whole learning curve. OnPay's been trying to get me to do a demo with them and I keep putting them off. I'm like, I don't have time. But like I said, my first employee started, maybe I'll have some time, I don't know, next year. Right? I'm curious. I'm really curious about OnPay. It looks like a good system. I'm researching, right? I'm always going to research. I'm always going to want to stay on top of that software. All right. So that is payroll. Does anyone have any more questions about payroll? I know that isn't a huge factor for most of you. Okay, we'll move on. All right, sales tax. This is my territory. All right. Please register with the Department of Revenue. I consulted with a business recently. She is a product-based business. She is selling products, collecting sales tax, and she has not yet registered with the Department of Revenue. I was like, oh, please go do that as soon as possible. Please go do that yesterday, right? The state Department of Revenue is going to determine what your filing frequency is. It depends a lot on your business. I have a fully service-based business. I'm growing rapidly, but I'm still just an annual filer, right? If you are a product-based business, then you're probably going to start at least quarterly. Okay, it might even be monthly, depending on what your projected volume is. They tell you that, and they can change it on you randomly throughout the year. I just had a client. It is a service-based client, a consulting company. They just went from quarterly to monthly as of October. Okay, so you have to pay attention to that stuff. Washington State has some pretty complex sales tax rules. Sales tax is location based. So co-op, you have a single location. People come to you when they buy where you are, right? You have a single rate. That's it. It's pretty easy. It's nice. If you delivered products, you would have to base it on the location where you delivered it to. That would be your sales tax rate. When you go on Amazon and buy stuff on Amazon, it will calculate your sales tax rate in Washington based on your rooftop location. You can literally be across the street and have two separate, like you could be in one sales tax category on this side of the table. You over here, I'm going to charge you 8.4%. You over here, I'm going to charge you 8.5% because this is the dividing line. Okay, that's how specific it is in Washington. There's that website. There's a lookup tool. So you can type in the exact website. It will tell you not only exactly what sales tax to charge, but also what location to charge. Okay,
Does QuickBooks update that automatically?
they're really good for a single state. QuickBooks Sales Tax Center is surprisingly good if you are a single state business. As a construction company, I assume you are. Some of my e-commerce, it's not a good option for them. Okay. Sales taxes, oof, man, you would think Wayfair, the whole thing was it was supposed to be easy. So, most of this is in relation to products, right? But there are certain services that are taxable. Do your research. One thing I'm gonna say about the Washington State Department of Revenue, you guys, they are so good. We are so fortunate. Our Department of Revenue is super helpful. Like, just call them. Just get on the phone with them and ask them questions. You can get a hold of somebody really easily. They are really good at answering your questions. They've got pretty good information on their website, but if you can't find it on the website, just call them. They're really helpful. I have dealt with sales tax in about 15 to 20 states now. Washington is my favorite, despite the fact that we're location based and kind of, like detailed. They have been easier to work with than pretty much anyone else. Well, but I've had to call some of the states I've called. Okay. So this is a note about being specific, right? So if you're within the city of Omak, here's another one. Sometimes, even though the tax rate is the same, 8.4, right? Your location code and the way that you file that at the end of the month is going to be a different code and a different location. That 4-digit code is really important in Washington. So this example, City of Omak and Okanagan County unincorporated are both 8.4%. Same rate. You would think same tax, right? No. Omak is going to be filed as location code 2407, and Okanagan County is location code 2424. Okay, so it's the same rate, but it is a very different location, and you have to file those. This is going to be important for construction. You have to file those by the location code. In QuickBooks, when you are doing the invoices, make sure that the shipped to address is specific. That's what QuickBooks is going to use. So you will have the billing address for the customer, you'll have the shipping address for the customer. That shipping address needs to be the exact job site where they are performing services. That's going to be your tax rate. Okay, and QuickBooks will do a good job. One thing QuickBooks doesn't do a great job of is they're not going to give you that 4-digit location code. It's not that. You can search when you go to file in Department of Revenue. You can, well, your bookkeeper probably does the filing, right? Yeah. So yeah, you don't have to worry about that. Okanagan, City of Okanagan, 8.5%. That's going to be 2406. Okay. So I was just this. It really, again, this is really industry specific. It's not going to apply to everybody. There are some stores that are going to have a really easy situation with this. Retail stores can deal with this. If, for example, I have a retail store in Winthrop that she likes to come over and do a pop-up with the Okanagan County Fair, that's a different tax location. That's where her sales are occurring. She needs to collect and remit tax for that location. Okay, so even if you have, somebody in the town of Omak or Okanagan who goes to the fair is on, it would be considered Okanagan County unincorporated. I think is that the reservation on that side? Yeah. So it's the reservation, but it gets counted as Oakland, which is weird.
Right, so if you're tribal, do you have to, yeah.
Yeah, I want to dig in.
That's where a lot of native businesses run into trouble. It's like, I don't have to pay or charge sales tax. And it's like,
Yeah,
I want to get clarification
Yeah.
because
call the department. Honestly, the Department of Revenue is really good about answering this question, so I would recommend that they call the Department of Revenue. The other thing I wanted to mention this because this is another one I've dealt with. If you are a seller and you are selling a taxable service to a member of the tribe, a registered member of the tribe, you don't have to charge them sales tax if they provide you with identification. There's a tribal card.
Yeah.
Okay, and there might be a special, it's been a few years since I've had to deal with this. There might be a form that you have to fill out, but they do have to let you know that is a situation where they don't have to pay sales tax because they are a member of the Confederated Tribes. So that's something where this would not be the case. Another one is a reseller's permit, right? We're all kind of familiar with that. Like if you're buying goods and Tenasket has a reseller's permit when they buy stuff to resell it. You're not gonna pay sales tax when you buy it. You're just gonna do it when you sell it. And then you need to track those separately, wholesale versus retail. Wholesale, no tax, retail, tax. Construction, this might be a situation if they ever work under another contractor, which depending on the size, like if your business ever subcontracts to another business, you're not gonna charge sales tax to the other business is gonna charge sales tax to the end recipient of that, okay? B&O tax is pretty straightforward for the most part. There may be nuances specific to your industry. I know manufacturing has some really unique stuff when it comes to B&O. There are categories. You want to make sure that you're reporting B&O in the correct category. I have an FOE that I used to work with that they had to do gambling was one of the categories. There are exemptions that you can claim for B&O taxes, right? So when they claimed gambling income, they were able to then deduct the amount of prizes paid out from that income, and they were not taxed on the prizes that they paid out. Because yeah, we brought that money in, but it went right back out as a direct expense of doing that service. However, construction, this is going to be relevant. If you have subcontractors that are working with you, you have to pay B&O tax on the money that goes out. So just because you receive it, I used to work with a logging company as well. So they subcontracted drivers, trucks, independent trucks that would carry their goods. You have an electrician that comes in, a specialist that comes in, a plumber, whatever it is that comes in and subcontracts for you. The money that you bring in for that, you don't deduct your subcontract, which is kind of shitty, but that's, right? Also, direct cost of goods. So like, if it's directly reimbursable. So say, for example, that I'm trying to think of what this would be. So I have a contract with a company and they reimburse me for travel expenses. So it's a direct dollar for dollar reimbursement, right? And those travel expenses are necessary for me to perform that service. So I would include that on my income. I can't deduct that as not it's direct reimbursement. It came in, it went out. So be aware when you're doing deductions on this. There's a lot of nuance in specific situations where it might or might not.
Do you file for businesses B&O tax?
Yes. Yeah. I actually, that's part of, honestly, for most of my Washington state businesses, that's part of what I do is the sales tax. And this is why I say I love Washington, because they make it really, really easy for me as a bookkeeping owner, firm owner, to have all of my clients in communication. So I have a bookkeeper login, you add my firm as a user on your account, and then I can go in and do all of that stuff they have. And I actually have one client that's all of it. I just do, yeah. So I like I have one client that's, well, I won't say that's all I do. That's my monthly agreement with them. They on occasion, like they recently went on vacation and they were like, hey, can you make sure payroll runs and our employees get paid? And I was like, sure, I just bill them hourly for that because that's kind of a unique situation. I try not to do that, but for them, it's, all right, any other questions on this, on sales tax, B&O tax? Okay. Record keeping, I told you we talk about this. This is the boring shit. Oh my gosh, nobody wants to deal with this, but you have to. This, yeah, it's the most boring thing I'll talk about. I'm sorry about that. I apologize. What do you need to keep? It's pretty self-explanatory. People pretty much know this, right? You need to keep any bills or invoices that you paid. You need to keep any receipts for expenses that you incurred. You need to keep invoices that you sent to your clients for sales receipts that you sent out for business, right? We talked about, I should have put invoices and sales receipts up there. We talked about doing invoices and sales receipts rather than just recording income through the bank. This is why it creates that kind of history for you, okay? You also want to keep your bank and credit card statements, and then obviously keep all your tax returns, right? And all the backup documentation for your tax returns. Minimum time, the recommended time is a minimum of 7 years. Yeah, I technically there isn't. Fun fact, the IRS could pull up your taxes from 20 years ago and require you to provide documentation. So technically, there's no time. These are all recommendations. I have seen the 3-year recommendation before. I recommend 7 years to my clients. You prepare taxes, you can.
It's interesting because since I do immigration too, I've helped this gentleman and we went to, the immigration office in Spokane, and they supposed to just record records for 20 years ago. Well, when we went to his appointment, they asked him for records for 23 years ago. And I said, the rule is 20 years. Yeah, but for his case, we wanna know in 23 years. Good thing. Then my client was I was impressed. He had the record for 23 years with me.
Wow.
I was like, whoa, I was in shock because I would have not kept. And he showed when he came in, and they were happy, and they gave him his papers. Yeah, but I was like, wow, you said 20 years, on your website and everything, they can do whatever they want to. Yeah, I learned that. They can do whatever they want. And IRS is the same way.
Yeah, there you go. Yeah. It's recommended. Some recommend 7, some recommend 3, but the IRS can come back and say, 17 years ago, show us your documents. It is what it is. And honestly, if you're keeping really good records and you're not intermingling your personal and your business finances, and your current records are looking really good, that's gonna go in your favor a lot. So even if you don't have records from previous, but I recommend that it is commonly recognized. That's what I was there. I was surprised that he's not wrong. So there's that. Here's a fun fact. Since 1997, this was older than I thought it was. I thought this was more recent, but since 1997, the IRS has accepted electronic records. You do not have to keep paper records, okay? And there are tools like Books Online. The mobile app has one decent use alone, and that is to make sure that you can upload receipts and statements and all that kind of stuff. QuickBooks Online is already going to house your invoices, sales receipts, right? You have that history in there already. You can add your receipts and expenses. It doesn't all have to be in the same location. So if you choose not to use QuickBooks Online for your receipts and expenses and bills, you can keep your invoices and sales receipts in QuickBooks Online and keep the expense side of things in HubDoc is software specifically for this that will connect it to QuickBooks and Xero for you. HubDoc is owned by Xero, so obviously they play very nicely in the sandbox together. It plays pretty well with QuickBooks as well. HubDoc is not a free service though. Okay. It costs.
Is it?
More than I wanted to pay is all I.
I guess it feels a little bit scary to not keep paper. I don't know why. And at the same time, I feel like the paper is out of control. Like paper is out of control in my world, and it's so I don't know. What are your thoughts on that?
I don't
know.
Keep paper.
You don't keep
I
paper.
don't keep paper.
Okay. I keep hearing that.
Yeah.
But yeah. Okay.
Yeah. And part of the reason is my business model, Gingersnap Bookkeeping, is a fully virtual business, right? Most of my clients are local. Most of my clients are in the Met Down surrounding areas. The most recent, actually 2 clients ago, I signed on a client from Minnesota. I have 2 clients in California. I have a client in Wenatchee. And I never meet with these clients in person. It is all done online. And so I have fully virtual record keeping.
No paper receipts.
No paper
Are you
receipts.
afraid that one of those times, they're gonna crash down and you don't have any papers? That's kind of my concern always, I
Well,
keep
I use
saying
Google.
virtual. And I'm thinking, what if the world ends and everything goes down? And you don't have any
I
papers.
don't think anyone cares about tax.
My dad, I'm gonna say my dad's a little bit of a doomsday prepper, like my parents, it's like, right, they're like the hippies way up rendezvous, and you know, he's a little bit of a doomsday prepper, and he's constantly, like, you gotta be prepared for the end of the world, and you know what, if he's right, and it all comes crashing down, nobody's gonna be auditing my business. They're gonna be trying to like hold me up at gunpoint for my fridge contents or something, I don't know, right? So, there is some concern, but the thing is if you're using an online service, HubDoc has, redundancies. Google Drive, Dropbox, OneDrive, the other ones I recommend, I would assume that they have some kind of redundancy in their storage. Because can you imagine how many companies and people use these services? And if they were to lose all of that data, can you imagine the lawsuit?
Well, Square crashed last week.
But did they lose any data permanently? Exactly.
It was just down, it just wasn't operational.
Yeah.
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 I mean, most people didn't even notice, but it was down.
So
Yeah.
we're
Even for personal, you guys, I am the people bookkeeper, right? I use YNAB. Does anyone want to know what YNAB is? You need a budget, YNAB, YNAB. It is personal.
I thought it was a wine app. Like,
You're like, that sounds good. Tell me more. No, it's personal budgeting software, and I've been using it for close to a decade. I've used it since before it was a software as a service subscription, right? I freaking love it. I don't have any personal receipts or records either. Okay. I use all online. Personally, so for my business, I use Google Drive. Okay, but for my personal, I have all of my like phone and photos and all that stuff backed up on OneDrive. That's what works for me. I actually use Google Drive for personal documents. I think OneDrive is pretty much just for my photos because nobody prints photos anymore, right? We want to, but then we never do. And then we have like 10 of the same shot and we don't know which one to pick. It's a thing. Like I have just dreams of organizing my photos. But anyway.
and when you and I retire, that's what we're gonna do. That's my hope.
I'm gonna send that kid's baby book finally. No, 50 years old, and I'll get the baby book.
I had this bib that I bought when I got pregnant with my first daughter that I started, sewing and everything. I still have it. And I already had grandkids and I had a hope that one day somebody's gonna use that bib.
I think that I finished my daughter's baby blanket when she was 16. So I highly recommend digital. Just keep it online. What I do for mine and what I would recommend that you do is that you create folders, organize it from day one so you don't have to organize it later, right? There's a folder for the year, and then within that year, there's a folder for every single month. And like 1 month, I don't think you need to limit it any less than that. I think 1 month is plenty. But then how are you naming those files is going to be big as well, right? So what I do when I name files is I put the year, the month, the day, the vendor, and then like if it's an invoice, I'll put the invoice number. If it's a receipt, I'll just put receipt, right? So they are organized by day and after. So it goes 2023, 09, 01, right? Et cetera, and that's going to automatically organize in the folder. Do that from day one because you don't want to go back and do that later. It's not fun. And I do this bank statement, same thing, and I don't bother with the day on a bank statement because it's always the end of the month, right? I'll just put the year in the month. Credit card statements, I do use the day because it could be different. It's the 17th. I think actually mine might be the 16th. It's the last day of my card cycle. So I'll put the day. But you don't have to because it's always the same every month, basically. Anyway, lots of tools to help that. Now for employees, if you have employees, you need to keep employee records as well. You need to keep their application. You need to keep their W-4s, all versions, and you need to keep their I-9. How many, okay, so for people who have employees, how many collect I-9s? This was a fun one when I came back. You do it good. You know what that is?
Yeah,
Okay,
our bookkeeping company collects them.
okay.
Yeah.
I moved back to the Met Hall. So I grew up in the Met Hall, right? And then for 10 years, so I lived in like the smallest place ever. And then I lived in LA for 10 years, the biggest place ever, right? So we left the Met Hall when I was like 10 years old. We went to LA, I came back, I got a job, they got my W-4. I was like, do you want my I-9? And they went, what? I said, wait a minute. Hang on. Are you not collecting? They didn't even know what it was. So I take this for granted. I love that you guys are already doing this and they're on top of it, but there's a lot of business owners, they just don't know. They just don't know they're supposed to, right? So you want to keep that as well. And all supporting documents for the I-9, obviously, if you have a copy of there. And make sure, when particularly with the employee records, make sure that that's secure. Don't email employee records, please. Don't email your social security number, your tax preparer. Make sure that there's a secure way. I have methods of keeping that information secure. If you're using Gusto or any other of the payroll softwares, you can have employees do self-onboarding. So they don't even give you, I mean, they do need to provide that information when they get hired, but you don't have to store that information, right? You can store it in Gusto and they can enter it in Gusto themselves. They can also enter their own banking information so that you don't have to have access to their banking information. Just ways that, because if we're going to be talking about virtual storage and using technology tools, we also need to talk about the security of that. Right? So just be careful with your information. Also keep a record of the hours they worked somewhere. And again, there's online tools that can help with this. On the Clock is software that it's like free up to $5 or something. I don't know. There's a free version and then there's a paid version. It's like $3 per employee. It's a really reasonable price. And that's just one. There's a ton of other options out there to track. Okay. I use Clockify for my staff. I use Clockify for myself.
Toggle's good too.
Toggle, yes. Clockify. I think it's clockify.me. It's not .com. And then Toggle is just TOGGL.com. The challenge with those two, these are more for virtual businesses, right? If you have you're tracking your tasks. And I think that's what's helpful for me because I don't bill my clients hourly, but I do track how much time I'm spending on them because there can be, like I want my businesses to grow. And when they grow, they take more work. It takes more time. There's a higher volume. And so I need to make sure that my pricing is going to remain effective. And if I can increase that pricing, I'm spending the time. So that's what I use that for. And then for my staff members, I also have them track, I will be having them track how much time they're spending on clients, how much time they're spending on internal operations. It just helps me to know how I run my business. I don't think it's the best option for employees who are just clocking in and out. They Clockify to work rate. They're okay, you could use it for that. On the Clock would be I think a better option.
I use them as like independent contractor to track hours on projects.
On projects, exactly, because then you can report based on the projects. Yeah.
Yeah, we have employees
Toggle.
who use that for projects, and they work in produce, so they work in utility, and they work in product.
So that might be good. Board has options for that as well. They can have different projects or tasks that they're working on. Most software will have some kind of check them out. So go browse, get a demo, like all of them are worth looking into and then deciding what's going to work best for your company and for your rate. Sometimes like Toggle and Clockify are very, very similar. I use Clockify, or this is a better example. For task management, my practice management, Asana is task management software, and then also ClickUp is very, very similar, right? I use Asana. You know why? Because it gives me unicorns. I'm not even kidding you. When you click a task, it's completed. Sometimes they'll have like little unicorns or like little narwhals or like a sloth that'll like fly across the page in this little celebration. I love that. It's fantastic. Also, the view of it works for my brain. And so this can be a really big factor when you're choosing software. What works for your brain? I have people that in my network who use ClickUp because it just makes sense to their brain. And I'm like, okay, cool, I don't get it. Whatever. Right. Okay. We're going to wrap it up and then you guys can stay and ask questions if you want. Biggest financial mistakes, you're not keeping track at all. I can't tell you how often I see that. That's typically very, very new businesses, okay? Overspending. Cash flow issues, underpricing, cash flow issues, mixing personal and business. We already talked about that. Not seeking professional advice. I want to say accounting professionals, okay, I'm going to go on a little detour here. I use accounting and bookkeeping kind of synonymous, okay? They are very, there's so much overlap, they may as well be indistinguishable, right? So I'm a bookkeeper, not an accountant. What is the difference? An accountant does a CPA. In the state of Washington, I could say that I do accounting, and I could probably call myself an accountant, and nobody's gonna come after me, right? That's fine. Typically, not always, but typically accountants are gonna do your taxes, and bookkeepers are gonna keep your books year round. Okay, this is fine, but I have seen a lot of people come to me, their accountant has been keeping their books year round, but your accountant is not worried about how your books look year round, they're just worried about getting the taxes done. And so I had a client come to me recently, he is trying to sell his business, his books are a mess, his liabilities are all over the place because the accountant doesn't care, they don't need that information for taxes. And I said, you're not gonna be able to sell your business unless you get your books cleaned up. Nobody's gonna be able to get a loan to buy this business with things like this. And so that's something to be aware of. Accountants are really, really, really good for a lot of things, not all of them great for bookkeeping, right? A bookkeeper, what I do is I am gonna help you round the year. I'm going to make sure that your books are clean every single month. I'm gonna make sure that we're not missing any details or tax write-offs as we go. We wanna get all the tax write-offs we can, as much as I can. I'm gonna advise you to go talk to your tax professional. There's things I don't know, right? Or to get additional research. It's the ongoing, and I'm gonna help you make sure that your business is in a position to flourish. If you're not pricing your products properly, I'm gonna see that in your CPA is that when they do your taxes. We're gonna look at trends month over month. We're gonna look at trends season over season. This is the biggest difference. So accounting professionals are a great resource. Just be aware of who you're talking to and why.
So this is my accountant, it says tax professional. It doesn't say accountant, it doesn't say bookkeeper.
Exactly. And some accountants do bookkeeping, and some accountants are really good at bookkeeping, and some tax professionals are really good at bookkeeping. And some bookkeepers do taxes, and they're incredible at that. I would not let anyone do my taxes unless they're either a CPA or an EA. Does anyone know what an EA is? Enrolled agent. It is a specific designation that you can get from the IRS that requires you to continue education to stay on top of tax laws and all that kind of stuff, right?
CA stand for?
Enrolled agent.
I just thought of it, somebody's business card and he said, well, they're not a CBA because somebody's thinking they do taxes.
They do taxes, yes.
This.
EA specifically means they can do taxes, absolutely. So, and you know, I mean, none of these are cut and dry. None of these things I'm saying are cut and dry. And everyone is very individual, right? Bookkeeping and accounting, it's a really unique industry because we're dealing with finances. And a lot of times when I'm dealing with small business owners, I'm dealing with more personal finances, right? It's a very personal thing. My business and me, it's like, yeah, I'm gonna keep them separate because of financial entity assumption, right? This kind of thing. But it's very interconnected. And my success, my financial success as an individual is 100% dependent on my financial success as a business owner. And so and we all know that in the US, talking about money is kind of taboo, right? And so it can be a very interesting relationship, but it's something that you need to be really comfortable with the people that are doing your taxes, they're doing your bookkeeping. You know, you need to make sure. I've had clients come to me that their previous professionals that they worked with had made them feel like an idiot because they didn't know things. And I was like, you don't know what you don't know. I'm going to teach you. I want you to know what you don't know. So just make sure that you find the right person. And honestly, it's entirely possible that the person that they left for me could be a great fit for somebody else and doesn't make another person feel stupid. You know, there's a lot of personality in this. Here's another fun fact. It's the Wild West out here, yo. What kind of degrees or certifications or legislation or oversight is there in the bookkeeping industry? None. Zero. Zilch. You could go out tomorrow and be like, I'm a bookkeeper now, I'm gonna do your books. My bartender partner could decide to hang his shingle and say, I'm a bookkeeper, I do books. And you would have no way of knowing. Anyone can do this, right? I've been doing this for 20 years. I don't have any degrees or certifications. I've been taught on the job and I'm constantly learning as part of who I am, right? I might not be the right fit for somebody who wants certification, who wants somebody who has some kind of a degree, right? If you trust my 20 years of lived experience, cool, let's work together. I'm gonna kick ass for you. But be very, very careful when you're picking a bookkeeper. Because I have had clients come to me and they're like, yeah, I had a bookkeeper and they were amazing. I worked with years and I look at the books and I'm like, they didn't know this. This person has no business doing books. Don't let your mother-in-law or your best friend do this. Even if they are a bookkeeper. I've literally turned away family members. I'm like, no, I'm not gonna do your books. I will send you to somebody who I know is gonna do a really good job. Because I have a big network nationwide. And I'll send you to somebody who's gonna be amazing for you, but I'm not doing it. Okay, all right. Accounting professionals, we're in this because we're passionate about seeing small businesses succeed. We really, really want to help you. Ask a lot of questions, be willing to pay. You might have to pay. And honestly, if you pay a little bit at the beginning to get set up, to get started on the right foot, that's the hardest part. And then you can keep the system going. I'm no longer providing that service of doing setup for businesses, but that's something I started out doing. I would do the setup, do a couple of short training videos and then set you loose because you can maintain it a lot easier if the system is set up properly in the first place. Get somebody to do that. Okay. Gentle Frog. If you Google Gentle Frog, they are a bookkeeping business based in the West Side somewhere, Seattle-ish area. They're a virtual business. Rachel is a freaking rock star. She does individual trainings with small business owners. I don't do that. Where my business is and with the focus I have right now, I don't have time to do those kind of individual trainings, okay? That's what her entire business is based on, small businesses. I think she has a DIY course even. And she's really good at what she does. And I want you guys to kick ass. So I'm gonna give you those resources. Or just go on YouTube and Google or, search.
She has videos on YouTube?
Yeah.
Okay.
Mm-hmm. Real estate developer, look for Ben Day of Lion Share. I think it's Lion Share, Lion something. Ben Day with Lion Share. He's a real estate specialist. Not construction specialist, but real estate. You mentioned real estate development, but you also mentioned construction. So I know there's a couple, they're very different. Ben Day is the king of real estate. Okay. He is amazing. He's based out of there's also books. The library has all three of these, okay? These are Accounting Made Simple by Mike Piper, CPA. It's really dry. I'm not gonna lie, that's a dry one. It's short though, it's like 100 pages, right? So it's dry, but it's short, not bad. The Accounting Game by Daryl Mullis and Judith Orloff. I think that's the lemonade stand one. That's pretty cool. It has lots of visuals and pictures that makes it not as dry, which, I mean, there's always gonna be an element of it because it's bookkeeping and accounting, it's a dry subject, but we do the best we can to make it fun. And also The Joy of Accounting by Peter Frampton and Mark Robilliard. Okay, those are all at the Okanagan County Library System. I've checked them all out myself. I haven't read them all. I read the Accounting Made Simple, but they're good resources. Check it out, dig through and see what you can figure out. Right? And then, I get so excited, you guys. So much fun for me. Next time, Friday, October 27th, from 9 a.m. to 11 a.m., we're going to be doing Bookkeeping 201. This is where we're going to do a deep dive on your financial statements. For me, that's the fun part. I put up there, yes, I know I'm weird. I love this. I love this. Financial statements, this is the reason we do everything. Everything we just talked about, everything we just did is so that we can have meaningful financial statements that are going to give you the information that you'll need to have a successful kick-ass business. Everything. Okay. Every decision you make as a business owner is a financial decision. Otherwise, you just have a hobby. You don't have a business. So, Friday, October 27th, 9 to 11, same place. And that's it. Thank you so much for this. Does anyone have questions? Do you want to talk about anything else?
I have a question.
Yeah.
And at the beginning, you said something about the LLC is a protection of our personal assets. How can I get that, the LLC?
The what? I'm sorry.
LLC.
Oh, LLC, yeah. So the LLC stands for Limited Liability Corporation, and you need to set that up with the Washington Secretary of State. Company, corporation, honestly, it's company, you're right. My apologies, it is company. LLC, Limited Liability Company, it's limited liability is the part that we want to know about, right? Because you're going to limit your liability to just the business. Yeah, and that gets set up with the Secretary of State in Washington. We are very fortunate in Washington. This is an inexpensive thing to do. In Washington, it's like $100 or less. I forget the exact number off the top of my head to set up an LLC. There you go, $100, right? California, you're talking $1,000
A year,
a year.
and this is a one-time?
No, it's like
No, there's an annual fee.
Yeah,
It's gotta be something.
It's, I was gonna say 60, throw it in the ballpark, like $100 or less a year. Okay, just say $100 a year, and then if it's less, then it's a happy surprise. Surprises. Always overestimate. That's the conservatism principle in action, right? We're gonna accidentally overestimate that expense to be conservative, and then when it's less than we estimated, we're happy because we were conservative, right? Instead of being like, oh crap, where am I gonna come up with an extra however much, right? That's one of the gap principles we talked about.
Do we need to sign up for the next?
Yes, Nathan can give you more information. I'm not sure how or where that's.
So with, how do we know what we need when we don't know what we don't know? For like, I can say, like, this is where I'm confused, like, I'm pretty smart, but when I get into QuickBooks and start, like, is this something that makes sense? Wait, maybe that's not, and like understanding what goes where and why, and I don't necessarily even know the why, but just like, I could do most of it, I just want somebody to check my work. Like, what type of a person, like, is that something that you do? Or do I need to like go to the gentle frog type of a situation?
Well, there's a couple options here, okay? So one, yeah, you could do a consultation with Gentle Frog, and I think she charges like $100 for a half hour or something, somewhere in that ballpark, right? So you could even do as short as a 15-minute session. I think it's like the shorter the session is, the more she charges for it, the more per minute. Worth it. She's incredible. I have an option. It's not my favorite thing to do, but it's something that I've kind of created as a stopgap for some local businesses because they're small enough that they don't really need monthly bookkeeping. And honestly, like my minimum package is $300 a month. Right. But I set up a quarterly option. And so what I do is the bookkeeper or the business owner does their own books on a regular basis. And then every quarter I come in, I do all the reconciliations. And then if there are corrections or errors, then I will give you a Loom. I love Loom. It's this like tool that I can screen record. So I will do a video in your books, showing you your books and being like, here's the errors and here's how you fix them. I don't fix them for you. You still have to fix them. But the cool part about that is if you fix your own errors, you're less likely to make it again, right? So that's an option. That's $450 a quarter, and that's billed monthly at $150. Okay, so that's an option. So depending on the size of your business, maybe neither one of those is a great choice for you. You know, you don't want to do monthly and you don't want to do quarterly. You can contact the club. Just go on our website. Just
yeah, and I found their YouTube channel, so I'm gonna check it out. But
yeah, the website's gonna have the information on scheduling and how much that is to schedule a consultation. Because you might be able to just do a screen share on the Zoom and show her your books, and I'm not sure how it works with her. You can ask for those questions to the company. Yeah. And she might have a team that does that with you instead of doing it personally. But I mean, you can get somebody just one time.
Yeah, because I just recently paid somebody $800 to fix my QuickBooks account, and I don't really know what they did. They didn't close out our consultation. They just sort of disappeared. They did work.
Interesting.
But I'm like, part of our deal was they were supposed to show me like how to continue, and then we were gonna do the quarterly option that you talked about. And I also paid QuickBooks to go in, fix my chart of accounts and do all the stuff.
Oh, QuickBooks Live.
Yeah.
Yeah.
And that was a big waste, and so I'm just looking for.
Don't use QuickBooks Live. I'm
Don't
sorry, I
do
didn't
it.
know you before.
Terrible. They're
Mm.
terrible.
It's actually funny, there's several services. QuickBooks Live, in case you don't know, it's QuickBooks accounting service, right? So QuickBooks, they have the software, but they also employ bookkeepers who will do your books for you. The problem is they don't have that individualized personal touch. They rush through things, there's errors, there's a lot of errors. And so it's actually kind of funny, when I did a business plan recently, somebody asked me about competition and I was like, well, there's QuickBooks Live, but I'm happy to take their unsatisfied customers. Right. They suck.
Well, and that's like, I think that's where like as business owners, like our brains are already occupied with keeping business alive. And then to have to like be stressed out about tax season, and not only that, but what does my cash flow look like and my projections, and
Yeah.
so. I don't know, I feel like
Well, and here's the thing, this is part of this, I'm gonna tell you guys a little bit of kind of future goals for me. I would really love to go into financial coaching more than I love the bookkeeping. I absolutely love that, but I want to do, because here's the thing, right? As a business owner, your time is super limited. We as humans have limited mental, emotional, and physical resources available to us. And there's this idea, I think particularly for women, right? I'm talking to a group of women, so I'm gonna just go there and say particularly for women, that like you can do all the things, and you should do all the things, because somehow if you go take care of your house, take care of yourself physically, do your makeup every day, make sure your kids are always perfectly presented, make sure dinner's on the table every night, and run your business, then you are morally failing somehow. That's bullshit, right? Bullshit.
Amen.
So what I like to work with people and tell them is like, you have limited resources, and there is no moral equivalence to outsourcing, to buying back your time, because that's what you're doing, right? So I don't have time to worry about my books. I don't have time to worry about my forecasting. I'm gonna pay somebody and I'm gonna buy that time and that mental energy back. I did this recently. I hired a housekeeper. It was hard to do because I felt like as a woman, right? But I'm a business owner and I would rather hang out with my kid on my time off than clean my house on my time off. So I hired somebody to come in. It's the same principle. You are buying your time back and you deserve to, and you should.
Well, I guess I'm also asking, I work with a lot of people that are starting their businesses. And as they're starting, they don't have the budget to pay that much for a bookkeeper,
Yes.
or even themselves.
Yes.
And so, like, being able to know, like, how to set up their chart of accounts and do those, like, basic things so that they're building a strong foundation moving forward in their business and understanding, like, how Washington state works as far as taxes and what their liabilities are.
So
And-
your clientele is business owners.
Yeah, they're all starting businesses or business owners.
Reach out to me. You need to partner with a bookkeeper. You need to partner with a bookkeeper who has a system, and I will find somebody and help you set up a system where you can partner with somebody that you trust, that you know is going to do a kick-ass job for your business owners to help them with that side of their business.
Yeah,
right?
that'd be fantastic.
Yeah, reach out to me, please, because I want to make sure, particularly with, like Native women who are,